Once again, please welcome the IMF Managing Director, Kristalina Georgieva. Great to have you with us. Also, very much delighted to welcome to the stage the Chairman of the Board of the Bank of Lithuania, Gediminas Šimkus, ladies and gentlemen. Delighted to be joined here on stage by the Minister of Finance and Economy of Albania, Delina Ibrahimaj, is here with us. And last but certainly not least, she's the Vice President at the European Investment Bank. Teresa Czerwińska is here, ladies and gentlemen. Wonderful to have you all, this very high-profile session with high-profile speakers. And let's dive right in, Managing Director. We've already talked in great detail about the challenges that we're facing worldwide. You've laid them out this morning. One of them, of course, being and remaining inflation. Inflation is surging nearly everywhere. Almost half of countries worldwide are seeing double-digit inflation rates or higher. The cost of living, I think, is something that politicians all around the world are grappling with. The Prime Minister this morning spoke to that effect. The question, of course, on everyone's mind is, do you expect inflation to remain high for much longer? You alluded a bit to it in your speech. Perhaps you could detail and more precisely say what more could and should be done to curtail and bring inflation down.
Well, thank you very much. Wonderful to be with this group. Usually at this time, coffee is being served. This time it is us.
Much more potent than coffee.
So I'll try. What is it that concerns us the most? What concerns us the most is that inflation not only has been much more persistent than initially anticipated, but also that core inflation is the one that is really stubborn. What we see is this year inflation at 7%, then it would go down, but only all the way in 2025, we anticipate that central banks would get their wish. And that's a long, long way. And the question you are asking is, why is it so, and what can be done? Why is it so? Because what we have seen is a combination of factors that cause this jump in inflation. One is the interruption in supply chains, and now their reconfiguration because of national security concerns, because of the trends of fragmentation. This is not helpful. Two, the shock from the war, and even when energy prices kind of went down and stabilized, food prices remain quite high for a variety of reasons. You know it. It is gas and fertilizers. It is disruptions still caused by the war. I would dare say we should not forget about climate shocks. Last year, we had climate shocks for the first time on all continents, some simultaneously, obviously disrupting agricultural production. And then we have the necessity fiscal policy felt to support households and businesses. There has been a great deal of debate. Was it that fiscal authorities were too generous that created more of an impetus in inflation? And we have to admit that during the round of response to COVID, countries that could do more did more. And I'll tell you, I have no regrets being among those who would say, if you can do some more, do it. it is very easy, hindsight, oh, we knew that would be wrong. That is so ingenious, is it the right word, not fair? Because we really did not know. Remember 2020? We had no idea how long this would last, what would be the impact. We only knew that if we allowed the economy to contract massively, the impact on people and on the future of growth would be dramatic. So we used our belt. We put some
Wait.
No, how do you call this that you hold your pants?
Suspenders.
Suspenders. We put suspenders, and on top of it, we kept our hands in the pockets so our pants don't fall. They didn't. But there is some impact of it, and we have to be honest to admit it. Now, when I look into actions, first, central banks have been truly disciplined to move on addressing inflation once it became clear that the combination of factors is significant. And I reject the enthusiasm to blame central banks, because if they were to act prematurely before it is clear that the problem is more systemic, then we would have blamed them for pushing growth down. By the way, growth did go down significantly. And now we see the fruits of this action of central banks already, and we will see more. The factors, I just want to be so as clear as I can be. The factors that would determine the speed of inflation going down, unfortunately, are very mixed. We have, on one side, the impact of higher interest rates. They constrain consumption and production, and therefore they help with inflation. But on the other hand, we have huge uncertainty, and we have fragmentation, and we have the need to accelerate the green transition, meaning that public spending in that direction has increased. So it's, I wish it was simple. It is not. But ultimately, we would get where we need to get to. Inflation is going to be pushed down. Why? Because it is paramount for the health of the economy. Inflation stays high. That creates uncertainty. It is terrible for our prospects for growth, and it is damaging for the poorest people in society more than for anybody else. So Boris and company, actually central bankers here, raise your hands. All the power to you, stay the course.
I think the very unambiguous message that you've sent here with the hands risen up, and of course it's very clear also from the way you speak about it, speeding up the green transition is a very passionate concern and project of yours. I will come back to you, of course, to speak more about that. Let me bring in Gediminas Šimkus here. However, the role of central bankers, we just heard the managing director appealing for what is to be done. In fact, if we're looking at the numbers, over 30 central banks have raised their interest rates last year. It's the largest rate hikes in 2 decades, and in many ways the end to an era of low interest. I'd also be interested, what lessons, what monetary policy lessons in particular, have you learned from this high inflation period that we find ourselves in?
So listening what the managing director has just said, I would like to begin saying, don't halu before you're out of the wood. We have not done yet, yeah, so there is some ground to cover, as with SVB we say, there is some things to do. And I don't think that monetary policy implementation is in a way a sprint that we have just experienced over the last year. It's more a marathon. And when I think in terms of a marathon, the hardest moment is before we finish. So ensuring the sufficiently restrictive monetary policy, then you might have an impact on the labor markets, on wages, and et cetera, et cetera. Keep at it is very difficult thing. So, but Don Halu, before you're out of the wood, so it's not the time to draw the conclusive lessons or list of them, but still there are some things we could learn from the recent experience and what the central banks did. I would single out 3 things. This is the agility of our toolkits, because every time crisis is different. Second, the importance of the supply side shocks in the inflationary developments. And then versatility of judgment, this is the third. And let me unpack these one by one. Very nicely, in the opening speeches, Governor Boris and Managing Director Kristalina, they reflected and showed how the economic environment was quickly to change in an unpredictable way. But one thing which remained stable was central bank mandate to deliver to its target. For the euro area is 2% inflation in the medium term. This is not for discussion, and we will do it, right? But what we are left with, this is with our toolkit, and we need to be agile with it so as to respond in the best way to deliver on our mandate. And luckily, and good news is that the ECB has this, so to say, is agile. And so just a couple of examples. So for instance, the pandemic emergency, I don't want to go that far in the past, but for example, pandemic and emergency purchase program and non-standard monetary policy tools to counter the risks to monetary policy transmission in 2020, or for instance, transmission protection instrument, which is another instrument to counter the unwarranted and disorderly market dynamics posing threat to monetary policy transmission across the euro area countries. So agility, first lesson. Second is the importance of the supply side. The recent events underscored how supply shocks can have broad and persistent effects. And they were very much speedy. And the persistence of price pressures and shocks to the energy market, it was not just, it didn't affect individual components of inflation. It induced a common component of inflation to increase. And the rising prices then was experienced by, so to say, sorry for my economic lingo, different economic agents across the economies. And this increases incentives when to increase wages or to request for wage compensation for higher profits, making inflation more sticky or stubborn as we have it. And final, versatility of judgment. Environment was changing very quickly. And it seems that, you can't rely in this environment too much on the economic model. They're useful, they're good, but they depend on past data. And in the environment of these abrupt changes, experience in policymaking and judgment have its premium. So I don't mean the models should be obsolete, but we have to put more weight on the policymakers' discretion in these models and to make them more versatile in this environment.
And when we speak about policymakers, of course, and their responsibilities, Minister Ibrahimaj, we're talking, everybody here at this conference and beyond, talking about how to bring inflation down, how to bring it down at the current juncture. And the fiscal policies that every country, of course, has to undertake and tackle might differ. But I would be curious to get your take about how you think fiscal policies, what role they play, as a matter of fact, in bringing down inflation, particularly, of course, since we are today in Croatia and Central Eastern and Southeastern European countries, such as, of course, including Albania.
Well, thank you very much for the question. It's important to understand, and the lessons that I have learned and we as policymakers in Albania have learned from this crisis is that there's no special pill to this. We are very lucky to have an independent monetary policy with a free floating exchange rate and inflation targeting at 3%. Definitely, as any other country, we had high inflation, not as high as the rest of the region and the rest of Europe, because our inflation last year was around 6.7%, which is very good concerning and considering all the circumstances. So that helped a lot. The independent monetary policy, and I want to underline, the free floating exchange rate helped a lot. Because in that moment, and I'm going back to the blaming, there's no one to blame. Because when you have this kind of crisis, unpredicted crisis that have not happened before, you cannot do things, so you try to do things by the book, but even if you don't do things by the book, then you will be blamed in the future. So there's no one to blame, but the persons to blame are governments. So if you make the wrong decisions, it's the Ministry of Finance, and it's the Minister of Finance who has done wrong. Nobody would care, and nobody would consider the government, at least the governor of the central bank. At least in countries like us, where the literacy is low, so everything is government's fault. So what we did was that we tried to have independent fiscal policy. So, which is difficult to say and to achieve. And in many cases during this recent crisis, I and the Ministry of Finance were addressed as the IMF of Albania, because we were trying to be independent from the needs, from the needs of the people and the needs of the government. So we tried to do the best we could in terms of reducing our debt, in terms of reducing our deficit, in terms of reducing the inflationary pressures. So the subsidies and the support that we gave to the ones most in need were to the ones most in need and for the reasons most in need. So we did make a questionable intervention on energy prices. So we decided that the whole shock on energy prices was going to be covered by the government. And the government covered all the increased energy prices, even if we are importers, net importers of energy. And it was a huge shock on our budget. We also decided to support the most vulnerable groups. Definitely, they deserved it. The prices were going up, so their disposable incomes were going down. So we needed to do something there. So by doing that, questionable, very questionable, very much debates on the political side if we were doing the right thing. We succeeded to have inflation not to go up at that level, at the regional level. And we succeeded our economy to continue growing. We succeeded our FDIs to increase. We succeeded our tourism sector, which is very important for Albania, to increase. And I'm mentioning this because they had an impact on the exchange rate. So we succeeded to appreciate our exchange rate towards the euro, which is our major trading partner. And this had an impact on inflation because we are very dependent on imported inflation. So the mix of policies, we managed to manage the windfall of our income and of our revenues in order to not have inflationary pressures on production, on internal inflation productions on one side. On the other side, we used it to reduce deficit and not to have excessive borrowing. And the mix of fiscal policies and monetary policies was the right one. Up until now, we don't know what will happen in the future, and it's very difficult to predict, but it was the right one. So I believe that the main message that I have to give here is that in times of uncertainties, it's better if you try to keep as much as you can things as they are. We decided not to engage ourselves into tax policies and into tax reductions, because I believe it would have shaken our entire stability. While we kept an eye on the economic development, which was questionable by the central bank, because in our debates with the central bank, because the increase in GDP would increase demand, and increase in demand would increase inflation. But that mix proved to be right. So I think that the best way to overcome a crisis is to coordinate policies and to sit down and do the best you can. Then the blaming, I think, will be on the academic side. No one is going to be blamed on what will happen on this crisis.
Well, I think you've given us a very intricate and accurate view of on how multi-layered the challenges are, really, that someone like you is facing. Though your country, from what I understand, unlike many other European countries, you were hardly, if at all, dependent on Russian energy, and that certainly was a blessing in disguise now in the aftermath. But of course, Teresa Czerwińska, we have spoken today repeatedly about the supply shocks that Europe had to suffer in previous years, including, of course, the energy crisis, the war in Ukraine, but of course the pandemic before that as well. I was wondering if you could lay out what the EU policies are at reducing the impact of these shocks, and in particular, what role the EIB, the European Investment Bank, can play in promoting and supporting these policies.
Thank you. Good afternoon, ladies and gentlemen. It's a pleasure to be here today because it's actually a very interesting composition of the panel. We have monetary policy, we have fiscal policy, and I'm happy to complement from the perspective of investment policy. So what does it mean for investment policy, how to apply it on the ground, and how to build resilience? And I want to say a couple of words how we understand as European Investment Bank and what does it mean for us. Build resilience on the one hand, and on the other hand, keep the competitive position of the European Union, because we need to have it in mind. So perhaps just for the first round, 2 points. Energy transition. A lot has been said about energy transition and the need to speed up energy transition. And I just want to remind you that we are not central bank, but as investment banker, we decided in 2019 actually, to approve a new energy lending policy, and we decided that we need to invest more in renewables, energy efficiency, and diversify energy sources in Europe. And actually today we see that it was really right direction in navigating in, by the way, choppy waters. So today our goal is to mobilize 1 trillion euros by 2030 in green investments, because we know very well that public financing is very important, but at the same time we know that it is not sufficient, and we need to attract private investors to the sector. And last year, our lending was 74 billion euros, and 58% of our lending was dedicated to climate and environment. It means that we are present in energy sector, but not only. We are present in transport sector. We are investing heavily in zero emission transport, and of course, we are looking also very closely not only for spreading technologies, but also for new technologies. And for us to build energy transition, to support energy transition, means also that today we need to speed up a little bit, to step up our support. And we decided to support REPowerEU by additional 30 billion euros for 5 years, and this budget will be dedicated to energy efficiency and renewables in energy sector. But renewables and energy transition, it's one part of the coin. We also are looking very closely to speed up the projects with technological sovereignty, and particularly critical raw materials, which are very important for many industries. So in this regard, we are financing projects in entire value chain and supply chain on critical raw materials, from mining to research and development to battery production, e-charging infrastructure, recycling, with signatures totaling over 3 billion euros over the last 7 years, and from which 1.3 billion euros dedicated to battery projects, critical for Europe's competitiveness. So for us, building resilience, building competitiveness means speed up energy transition and dedicate additional financing to projects in critical areas. And my second point is on financing, because today we are talking a lot about monetary policy, about cost of capital, which is very important for companies moving from the COVID-19 pandemic with balance sheets with high debt. So today we see big need to provide risk-sharing instruments to finance projects in high-risk areas. For example, R&D, but also very innovative projects, not only in energy sector, but also, as I mentioned previously, in breakthrough technologies. For example, hydrogen or other areas. So for us, what does it mean, build resilience? Build resilience means that we need to speed up financing projects in critical areas for the EU.
Yeah, and Managing Director Teresa Czerwińska very rightly, of course, said we need to speed up the green transition here in this region, in Europe, globally, really, something that you have very much stressed and emphasized during the first round of questioning as well. We have many policymakers here in the room from the region. What advice would you give them on how to speed up that much needed green transition? Of course, also on how to mobilize the required financing, because without the financing, nothing gets done.
My first message to our region is that the level of ambition on aggregate is just not high enough. I love you dearly, but you're not where you have to be. If you take countries individually, and then you look at their emission profile, we will find out that there are not that few where, in fact, by 2030, emissions will go up, not down. Why is this a problem? It's a problem for two reasons. The first reason is because we, as a global community, are faced with an existential crisis that is going to fall on our children and grandchildren. Shame on us. The second reason is competitiveness. Those who are fast to advance R&D and investments, fast to create better conditions for private capital to be attracted to them, they would be positioned in competitive terms better. I want to, you ask me what could the region do? Yes. And I would give my thoughts on that. First, we are still in kind of in the woods on how exactly to use subsidies as a positive instrument for the transition. We know harmful subsidies. We haven't quite eliminated them, by a very long mile. Actually, if you take direct and indirect harmful subsidies globally, they are somewhere between $5 and $6 trillion when you include the fact that we are not pricing carbon where we should. And that is a subsidy, but a harmful one. Second, we today, everywhere, industrial policy is the name of the game. I'm not against that. I actually do believe that there has to be more impetus, in other words, more funding, more energy to accelerate the green transition, and you should do it. You should use subsidies to bring R&D up to speed and to make it more attractive for private capital to come to you rather than go somewhere else. But this is a very slippery slope. How much of this is positive, how much it is actually protectionism in a green uniform. You look at IRA, you look at the response to IRA in Europe, and there is still some more that can be done to put the protection in the right place, not go above board and then actually harm the economy rather than, and harm the transition. Because guess what? It cannot be my transition. It has to be the world's transition. And my third point is on something that I have talked about. I'm blue in the face talking about it, carbon price. I would love to see this region thinking from a fiscal perspective how to make pricing carbon a replacement of other forms of taxation. You know, tax pollution, not people. And that the Canadians are, in my view, among the best. They have a trajectory for increasing carbon tax that is predictable, and it is quite steep. Then they collect the money and they give it back to people. So they are actually not antagonizing society in the way they do it. So why not in the region to have more ambition to be on the front line of how fiscal policy works for the green transition and works for people? I want to finish with a very simple plea to each and every one of us. I'm sure we all have pictures of our families. Look at this picture more often and just think, how are you going to impact their aspiration for a good life? My own awakening, and I have been working on environment for a long time, so obviously I have like a competitive edge here. But it wasn't until 2018 when I read, just before Katowice, the IPCC report, and it was devastating read. And I thought about my granddaughter, that by the time she's 20, poverty in the world will go up. By the time she's 40, migration, you know, we will be swamped by people that are living areas that are unlivable. And if she were to be as lucky as the late Elizabeth II to live that long, if we don't act, our planet would be barely livable. So I'm saying this in the most economist thinking way, that it doesn't really matter if we have sound and inclusive growth on a dead planet, because then, guess what? We are cooked. So
quite literally.
Quite literally. So please think today policy decisions today make you more competitive, and as an added bonus, you actually can leave your kids a good legacy. Look at this picture.
I think those are very, very powerful words that you have spoken. The plea for everyone to recognize the urgency that we're all facing. It's not a challenge or a problem in the distant future, but it's right here. It needs to be tackled right here. Minister Ibrahimaj, I want to give you a chance to respond directly to what the managing director said as a policymaker who is at the forefront, and to raise that awareness that something needs to be done right now. Is that something, because you're also a politician of, if I may say, of a younger generation, and I'm sure that's very much on your mind?
Definitely. I mean, I am in a very comfortable situation here, because in Albania we have 100% hydropower.
Right.
So, of course, all the words are very striking, and but I cannot reply to that in a proper, with a proper policy tool that can help the future. I think that, but definitely, this is not something that we can see, we have to see locally. This is something that we have to see regionally and broader than that. So fiscal policy is the right tool. I do believe that fiscal policy is the right tool, and I think that we need to look at more closer on how regionally we can do something together, because the pollution of another country will affect my kids and the kids of my kids. So we cannot see it only in a very individual level. We have to look at the future, and we have to do it now, because also with all the discussion of the energy prices, and last year in the middle of the crisis, many countries thought to postpone all the commitments that have been taken into this direction. So we should stick to the long term, because this crisis and other crises that may come in the future, they will pass. The environment is going to be here, and it's the only place that we have. So we cannot, and here everyone is to blame, going back to the blaming idea. So here, if we don't act, and if we don't have stable plans and long-term plans and not stick to it, then we will all be to blame.
And no doubt about that. Mr. Chairman, we're talking about the region here, of course, and for good reason, since we're in Croatia, but you're representing a Baltic country, and I was wondering, as somebody who's meeting with your counterparts within Europe, if you see any huge difference in the response to supply shocks, in the response to speeding up the green transition between Central Eastern, Southeastern European countries as well as Western European economies. Are we all on the same page here, or do you see stark differences?
Well, probably I'll stick to the monetary policy area answering your question, and not sure about all these greening issues, but I think there are differences, both in terms of economic developments and to the monetary policy response. And then the thing is how much this result into the final result. So let me begin here that all the European, so basically it was all across the globe, but Western European countries as well as the CESEE region, they all experienced the sharp increase in inflation. But inflation, headline inflation and core inflation was somewhat lower in Western countries than CESEE peers. And this is where the energy component matters or played a bigger role in this region than in Western economies, and this was also reflected in food prices. The other difference is in core inflation, which reveals the different inflationary drivers. So this region experienced, on average, I would say, a more positive output gap recorded in 2022, meaning that wages, nominal wages, were growing faster here, and then reinforcing core inflation pressures, bigger pressures in CESEE economies, and therefore, in this region, to bring inflation down, it will take most likely a little bit longer than in Western European countries. What regards the monetary policy reaction, it's also, I think, it's kind of obvious that central banks in this region reacted quicker and stronger than for instance, Euro area or some other bigger central banks from Europe. The other question is, and this actually was successful in a way that has helped to prevent capital outflow and weakening the currencies. The other question is how much this policy was successful from the perspective of bringing inflation down. And I think it's not, you know, we agreed here all that there is nothing to blame about, but it's also, we need to admit that the countries in this region, they're also very much dependent on the monetary policy from bigger jurisdiction, because these countries are small, open economies, and for instance, if Euro area is still providing monetary policy stimulus, so there is some, so to say, some time or some work to do in addition to monetary policy, and this is where the fiscal policy is very much important. Prudent, as you said, independent fiscal policy is very important to keep economy good, in a good shape.
Yeah, and keep it robust and prepare it for the future supply shocks that we might see on this continent. Teresa Czerwińska, let me come back just once more about this issue of green transition, because at the end of the day, the European Investment Bank...
Yeah, we are the climate bank, so...
There you go. There you go. It is a topic that clearly the bank has dedicated a lot of resources, a lot of energy to, and I was wondering what barriers, we've talked about the necessity to move things along, but what barriers are you seeing at the moment in order to accomplish what we all agree is a must, and what instruments you see that would enable to speed up the necessary process here?
Yeah, first of all, what barriers do we see to speed up energy transition and green transition in general? So I think the first barrier we need to recognize it's a barrier of understanding, because without people, without common understanding of green transition, of benefits coming from green transition, green and digital actually, two pillars in our bank, we cannot move. So for us, we call it just transition mechanism, just transition and speeding transition. It means that we need to dedicate additional resources for regions heavily dependent on fossil fuels. It means that it is not possible to switch overnight from the previous economy to new path for growth. It means that we need strategic plans, and it means that we need, once again, additional resources. And it is why I underlined from the very beginning that for us, green transition means that we pay particular attention to cohesion regions. And today we understand very well that for people in cohesion regions, in regions heavily dependent on Russian gas and fossil fuels, it is of absolute importance to have additional financing. It is why we are dedicating technical assistance to the regions to prepare bankable projects. We are providing free of charge technical assistance, and then following with lending, long-term lending, and lending at lower cost, because as a AAA bank we can offer financial benefit to our counterparts. And it is why for us monetary policy is of big importance, because in our case it the impact is on the cost of financing. And cost of financing, it is absolutely crucial, not only for energy sector, but particularly for small and medium enterprises. And when we are talking very broadly, macroeconomically about energy transition, what does it mean for small and medium enterprises? We are providing our investment survey among 13,000 of European companies. We are asking them about the barriers. The barriers, the most important barrier is financing and high level of uncertainty. How to invest in the environment with huge level of uncertainty. And I'm talking not only about the war in Ukraine, but I'm talking also about the policy at the level, the direction of traveling. We are talking about fiscal policy, monetary policy. How to translate it for small and medium enterprises? It is why we are providing dedicated financing to small and medium enterprises to create jobs in heavily dependent regions. And then, if we do that, we can convince people to move to greener future. And as Kristalina underlined, to better future for our children. Otherwise, people don't see any alternative for their activity. So if you are asking me what is the main barrier, uncertainty, cost of capital, but also very important one, it's lack of skills. Because for new economy, for new growth model, we need also people with different skills, with different professional path of career, and for that also we need to dedicate resources. Today, of course, we are talking about large infrastructure, about energy efficiency, but also we need to invest in our future in terms of skills. So it is why, as I said, we are looking at big infrastructure, but also we are looking how to support on the ground reskilling, upskilling, and also SME sector, which is, of course, which is very broad, but which creates not such big part of GDP, but it worth attention. So it is why we are providing different instruments. And perhaps my final remark, because today I'm representing EIB group, so it means not only the bank, but also European Investment Fund. So via European Investment Fund, we are also providing instruments, risk-sharing instruments. It means that we can invest not only via loans, but we also can become a shareholder of enterprises. It gives additional vector for the business. And as I said, business is very much keen to look for risk-sharing instruments, because to attract private business, we need to share risk, and we need to take more risk as a public institution.
We're running out of time. We're almost out of time, only a couple of minutes remaining. And Managing Director, if you allow, I'm going to start it with you. I'm going to end with you. We started out talking about inflation, of course, and the many negative aspects that inflation brings with it. The lack of price stability, of course, is not good for businesses. At the end of the day, there's an erosion of real income. People are suffering. Life is getting more expensive. But there's also another one, of course, in that inflation leads to long periods of instability and can undermine democracy. You spoke also in our previous encounters with great joy about your grandkids and about the future that you see. How concerned are you? You've alluded to it in no unambiguous words, but is this a problem that's going to stay with us? Are we heading towards an inflation age? Do we have to learn to live with it?
Well, the question we need to ask ourselves is, will price cost factors accumulate? And we don't quite know the answer, but there is a probability that they may. Why? Because if fragmentation leads to a higher cost, because we don't take full advantage of division of labor, yeah, there would be pressure on prices. If we look at the green transition, honestly, there would be a period of time when costs will go up. They would then go down, and longer term, it would be cheaper to push now But nonetheless, there would be that pressure, and you are all familiar with the greenflation story. Maybe there would be a bit of that as well. So many are saying, wait a minute, is it correct that we stick to the 2%? If we are in a world in which we might have to be a bit higher? The answer to this is, today, we don't quite know. What we do know is that if we today start arguing, should it be 2% or 3%, we would end up with 4% or 5% because of the inertia that this would create. Actually, I'm completely behind central banks that are saying, first thing first, let's get to a 2%. This is our target. We hang our hat of credibility on it, on reaching it. And then, in meanwhile, we have time to think through cost factors and what is going to happen. Because what we don't know is the flip side of this story. How could innovation, artificial intelligence, God forbid, it hits us too fast, but how would that affect costs? How would the inclusion of Africa in the world economy with youthful population and lower cost benefit us? So we have to look at all aspects before we get to any conclusion. In meanwhile, just get to target. I am not super worried. I think the world is wise enough not to allow inflation to get out of control. I come from a country that in the mid-90s had close to hyperinflation. I can call it hyperinflation. And like the Germans, we are immune for life, for generations. It is so terrible that you see all your savings evaporate. There is nothing in the stores. I still remember in Bulgaria getting up 4 o'clock in the morning, going queue to buy milk in Bulgaria. Well, one thing we have is agriculture, for God's sake. So I am very confident that we will overcome the inflation. I am also quite certain that we will have to be humble and open-minded in thinking about cost patterns, cost structures, and what is the future that would define appropriate targets. Meanwhile, guard the independence of central banks. This is so important for us to have credible monetary policy that would bring that anchor that I have been talking about.
I'm sure that's a message everybody here in this audience can wholeheartedly get behind. I think, ladies and gentlemen, I speak for all when I say this has been an extremely very, very educational, thoughtful, and content-rich debate that we've been able to listen to and witness here in the previous 60 minutes. One thing is for sure, many more challenges remain, but the right decisions and implementations have to be taken now in order to counterbalance the many frequent supply shocks that we're facing. Kristalina Georgieva, Gediminas Šimkus, Delina Ibrahimaj, and Teresa Czerwińska, thank you so much. This is your applause. I appreciate it. Thank you. Thank you. And to recover, if you will, from and absorb the many inputs that we've heard, we're actually going for one last coffee break and then come back here for the grand finale. Thank you so much.
And also thank you to Ali Aslan.
No, this is... Thank you. You're too kind.